I want to congratulate Jack Mallers on becoming the CEO of 21 Capital, which is shaping up to be the second or third largest publicly traded Bitcoin treasury company. Like Strategy and other Bitcoin treasury companies, the core objective is to increase Bitcoin per share over time, generating what Saylor refers to as BTC yield. It's a company built around financial engineering, selling debt and equity to accumulate more Bitcoin. Strategy is effectively intelligently leveraged Bitcoin exposure with no short-term liquidation risk. And now Jack Mallers, Cantor Fitzgerald, and Tether are copying that same playbook. Thinking back to the origin of MicroStrategy, I still remember the summer of 2020 when MicroStrategy put out that first press release saying they were evaluating options for their treasury. Bitcoin, gold, T-bills, and maybe even the S&P 500 were the assets on their list. It seemed minor at the time, but then Saylor went nearly all in on Bitcoin and has spent the past few years going on hundreds of podcasts, including mine, explaining how and why he did it. In a way, he's published the blueprint, and now someone is actually following it on a serious scale from the start. Jack said they want to acquire over 40,000 Bitcoin. That's serious. Sure, others like Metaplanet and Similar Scientific are doing great work, but they're still small. This may be the first big follow-through from someone with serious capital. And to me, this isn't competition, it's co-opetition. It's like free trade between individuals. If we all stopped trading with each other tomorrow, we'd be forced into complete self-sufficiency. And most of us can't build houses, air conditioning units, computers, microchips, or even pencils. Our standard of living would collapse, but trade expands wealth. And Bitcoin is just the money that enables that trade across time and space without counterparty risk. So when another public company joins the Bitcoin standard, it helps grow the monetary network. Yes, they're technically competitors, but their incentives are aligned. The more capital they raise and allocate to Bitcoin, the more demand they create for a fixed supply asset, and that benefits everyone already holding Bitcoin. Now, could it affect the premium MSTR trades at over its net asset value? Maybe. In my opinion, the reason the premium exists is because it's one of the only ways to buy Bitcoin with leverage and no short-term liquidation risk. MicroStrategy borrows at nearly 0% interest via convertible notes, buys Bitcoin, and uses equity ATMs to generate BTC yield. The higher the premium, the more yield they can generate with fewer new shares. If 21 Capital does the same, it could introduce some competition on that front. But the price of Bitcoin could rise faster than any potential compression in MicroStrategy's NAV multiple. And because Bitcoin is a Veblen good, a monetary network that becomes more valuable as more people use it, you could actually see the MNAV multiple potentially even rise alongside increasing Bitcoin adoption. So no, I don't think Saylor's mad someone is copying his strategy at scale. This is what he's been trying to get the world to do for years. Someone with a few $1 billion just finally listened. Thanks for watching, everyone, and see you next time.